If you're new to trading or you've been trading for some time and maybe you've had the idea to switch vehicles from trading stocks to going to something like Forex or futures via trading out of funded accounts, this video you are definitely going to want to pay attention to. I'm Pat Mitchell. I've been a professional trader for the past 11 years, and I'm here to give you high-level professional trade analysis and dissection, as well as professional day trading education, all here for free on YouTube and on X. And today, as I talked about, we're going to be discussing, going through all of the different products or vehicles at which you can trade. We're going to talk about Forex. We're going to talk about futures. We're going to talk about stocks and options. And we're also going to talk about penny stocks. We're going to put that one in. So let's get right into it. Give me 1 sec. I'm going to fire up these charts. Let's rock and roll. So first off, I want to just start off by saying I personally trade stocks and options. And at the end of this, I'm going to tell you exactly why those are the vehicles at which I trade. Now, first, I want to talk about, let's get penny stocks out of the way. Penny stocks are enticing and palatable to new traders because of the cost. The barrier to entry is very low. You can buy 1,000 shares for $1,000, usually on a penny stock. Penny stocks are anywhere between, technically it's between or up to $10. But for the most part, a lot of people are trading really cheap stocks that are in that $1, $3 range. You hear people say when they get to that $3 range, it's pretty expensive. So they're looking more so for opportunities in that $1 or under range. Now, the problem with this is risk. A lot of these are extremely low float or ultra low float stocks. The float being how many shares are available for buying and selling at any given time. And when you're dealing with something that is low float, let's just take a look at it and break out a calculator here just to do some really, really quick math on it. So there are lots of stocks out there that have ultra low float. We'll even give it as low as 100,000 shares, but let's go 200,000 shares available to buy and sell. Now, when you're a new trader, maybe you're not looking at those numbers clearly, but let's take a look. How many shares, how much money would it take to essentially buy up that entire float on a $1 stock? Wow, that's pretty easy. It's 200,000 shares. So maybe you think about that number and you think that that's a very big, big number, but it isn't. If you break it down, let's say you have a 10,000 share position, which isn't out of the realm of possibility. It's a $10,000 position. It's not a lot. So how many traders trading positions like this until you get that float completely bought up? Not a lot, right? So there's a problem with that. When you have very few traders, that one trader, right? Let's say it's 100 traders could potentially buy up this entire float. Out of that 100, one trader with a large position does whatever he wants to do, whether it be buying or selling a partial position, buying a partial position, however you want to look at it. He influences that stock and the movement of that stock greatly. We don't want that, okay? As traders, we want to be able to get in and out of these stocks without being noticed, so to speak, okay? Now, obviously, not literally. Nobody's looking for us or looking at us, but you don't want that that type of float to be trading. Now, granted, and some people will make the argument, not all penny stocks have ultra low float. And you're correct. Even a 1 million share float, it sounds like a lot. It is not. You're in the same. You're having the same problem. So I highly would stick and get away from penny stocks. There's a much better way. If you're underfunded as a new trader, usually a lot of traders, when they're first getting into this, they don't have a lot of money to go in, and that's why they go towards these certain vehicles. There are options, and you can trade options on a well-known proper stock, like let's say Apple or ETFs like SPY and Qs for nothing, for very minimal money, where one contract, which is the equivalent to 100 shares, that would cost you about $100, $150 depending on premium. So it's a way to get involved in these stocks, real stocks, proper stocks, and ETFs for a reasonable price. And then you're also working with percentage gains based off of options. It's not points per share like you would on stocks. You're working off of percentage, which is generally why traders get involved with penny stocks, because it is generally percentage based, right? Because they have big moves, you're looking for a percentage based gain. Well, you can do that on options, and it's not unheard of to easily get into the area of 20% to 100% gains on those trades. Now, I'm not saying on every single trade. I'm just saying as a percentage based trade, those moves do happen on a regular basis. So you have to ask yourself, why would you want to be trading a vehicle that can be heavily and highly manipulated by a very small amount of traders when you can trade something where you have a large pool of professional traders trading? When professionals trade, they follow rules. When amateurs trade, they don't follow rules. They follow emotion and instinct. So you're going to have a much smoother flow, something that responds to natural movement, what I call natural movement, which is the ebb and the flow of a stock, how it should be moving without manipulation. So now I want to get right into basically the meat of this video. I want to talk about funded accounts and trading futures. I've seen a rise to these funded accounts, and years and years and years ago, I used to be an advocate for these funded accounts. And I'll tell you why, because it gave underfunded traders the ability to trade real stocks. Okay. Now, the number one, we'll get right to it. The number one reason why you should not trade futures out of a funded account is because in those funded accounts, those old TradeNet accounts, and now they've been rebranded under a new name. If you're an American, if you live in the United States, those funded accounts are not actual stocks or contracts. It is something called CFDs, contract for difference. And what it is, it basically gives traders the ability to get involved with futures or commodities and Forex without actually owning that stock or contract. That's what it is. It's kind of like, I don't want to call it a fake contract, but it's a way of, or a fake stock, but it's a way of looking at it. When you buy a regular stock, like when you go into the stock market and you buy, let's say 50 shares of Apple, you own those shares. Those are physically yours. Okay. Now, when you're buying out of those funded accounts, you don't own it. Now, day traders may be looking at this and like, well, I don't really care if I own those shares or not. I'm in and out. I don't care. I'm not investing. You'd be right. That's fine. Here's the problem if you're an American. Do you realize CFDs, contract for difference, what you're trading out of in those funded accounts are illegal for Americans to trade out of? You are not. They are absolutely illegal. So now you have to ask yourself the question, well, if that's illegal and I'm trading out of it, number one, at some point, the tax man will catch up to you if you start pulling profit out of those accounts. They will. Absolutely. That's number one. Number two, how are you going to get paid? That's why a lot of these funded accounts pay you out via PayPal, because it's not a real account. It's all smoke and mirrors and it's all bullshit. They will absolutely sell you these accounts. Okay. They'll sell you the account, but to pay you out, and some of you, sure, you may be saying, well, I've been paid out in my account. I've made money. I've been profitable, and I put in for my request for withdrawal and they paid me out. For now. There's a reason why back in, this would have been probably 2018, 2019, SureTrader, which was a offshore broker, but everybody used them because they gave you 6-to-1 margin. There's a reason why they shut it down. because SureTrader weren't stocks. Those were CFDs. So if you were an American, you can't trade those. That's how these funded accounts work. These funded accounts are a fucking scam. They are a scam. Not to mention the main fucking guy, right? The same one that owned TradeNet, his new company, and I can't think of it off the top of my head right now. He's promoting scammers. That's legitimately going on. My business is a victim of that, where he is basically promoting a fake Trick Trades, Pat Mitchell, to promote his funded accounts. Now, it's not him on the paperwork anymore because he got ultimately busted with TradeNet. Now it is his former right-hand man of TradeNet that is basically the head of this. Okay, this is a fucking scam. Now, some of you may be saying, how can it be a scam if I'm being paid out? For now, you are being paid out. Okay, you need to get away from these fucking funded accounts. They are absolutely you're gonna get screwed, man. So that's just from that standpoint of funded accounts. So or from trading futures and Forex and stuff like that out of these funded accounts. So now let's look at one of the big negatives to trading futures. Maybe you don't have a funded account. Maybe you have your own account. Let's go over why it's an issue. So first, I want to go into a stock or ETF. So if you're trading a regular stock or ETF, right, this is your level of entry, this support level. So let's say it comes down, market opens up, pops up, pulls back, you enter here, okay? So that's your first entry. Comes up, maybe you want to add into this, you add in here. So you have two entries here at 657.41. As it slips through that support, maybe your stop is here. So when it slips through, you add. There's a reason why you add. It corrects your average, okay? And it still falls within your risk tolerances. So if you have an entry here at that price point and an entry here at that price point, and let's say, just for the sake of this, it is an equal amount of shares that you're adding. This will just make it easier. So let's say this was 100 shares, 100 shares. So that's 200 shares here. And then you added 200 more shares here. Your average price would be here. Okay. So let's change these numbers around. Well, no, we don't need to do that. Your average is right here. Okay. That's a good thing. So when you add and you're adding into your risk, and maybe there's another technical support area right here, as soon as it bounces, you are green on that position. Having the ability to manipulate your average can be very beneficial in the ways of management and managing a trade. Okay. So it helps you in these situations. Sure, you have more risk because you have a bigger and larger position, but if it is part of your trade plan, it is fine. So if, again, and I hate to be repetitive here, I'm not trying to be annoying, it's just to really hammer this home. If you start here and you add here, your average will be here about halfway. So when it bounces, you are immediately green on that position. Okay. So now that we have stocks and options and ETFs and all of that, the regular stuff taken care of, what does it look like on futures? Here's the problem. So let me clean this up. So I'm going to try and find some sort of a same setup. We'll go right here. Okay. So same idea. So you enter into this level, right? And you go in with 5 contracts, okay? And you get executed at this price point right there, 6586 and 50, okay, it slips through that support level. So you add another 5 contracts. And that price point is at 65, 85, 25. Okay. So it's not a big difference. Okay. You'd be working with more risk and it could definitely come down far greater, but just follow along. So if you enter in with 5 here and then it comes through your support, so you want to correct it and you add another 5, you can't correct that average. When you go to sell these contracts here, you're selling at that price. Your fill, so if you want to sell, let's say here, okay, these 5 contracts that you're selling, your P&L is calculated by this, okay? So you make this much on it. You may be thinking, well, that's okay. Well, here's the difference. These 5 contracts will get this much P&L if you're selling those all the way up at these highs. There's a big fucking difference. You're actually screwing yourself out of P&L because in stocks and options, we'll just say stocks for now, your average is here. So you would have made more money if you entered with 5, you added 5, your average is here, and then you sold here. You have all of your fill with this. Do you understand what I'm saying? So when you enter here at this specific price point and sell here, your P&L is calculated by where you entered with those 5 and then with these 5. Now, that's when you're trading very even with contracts. You're entering 5 and then you're adding 5. So here's a problem. Let's say you start in with 10 and you add 1. Okay? And then you're selling here. So if it's the same 5 and 5, it's not too big of a deal. But when you have your sizing not correct, that's not a correct way to size at all. It should be inverse, if anything. You're really missing out on profit. There's not a way to correct it. Now, this is just a normal trade scenario that I'm giving you. I'm just going to draw out a scenario, okay? So here's your entry to go long, and maybe down here is your risk on a trade. So a market opens up, it comes down into here, and you enter. And it keeps coming down. This is your stop, and it comes into your stop. It doesn't quite hit it, so you're okay. And as you enter here, you are adding on washes, and that's your last add, okay? There's no average here, where your average, if you're sizing correctly, can easily be down here or even lower. That's not the case. You're getting these, your fill price is the price at which you're selling at. You cannot correct that average. It's a big deal. Now, it might not be a big deal for you guys right now when you're trading very small size. And this is a problem that a lot of new traders have. They don't see past the hand in front of their face. They can't see down the road. They can't see into the future. They're always thinking that they're going to be trading small amounts of contracts or shares. So they're never thinking ahead for when they become an actual professional trader. And it's a big mistake. Because as you progress as a trader, you want all of these advantages. Obviously, we're here to make more money. We want to be able to provide for our family, right? Now, I'm not saying that you can't. There are very successful futures traders. They take extremely large accounts. These are expensive contracts, guys. Most of you, that's why you're trading out of a funded account, out of CFDs, and those CFDs they're a legitimate scam. Go look it up. If you don't want to take my word for it, that's fine. Go look up right now. Are CFDs illegal to trade in the United States? Yes, they are illegal. What you're doing is illegal. If you think for a second that the tax man isn't going to come fucking clamp down on your ass, you're wrong. Think about that. It's a fucking problem, guys. So that's the secondary issue with futures. Now I want to do one more thing, and I want to talk about Forex in general. So what's Forex for those of you that don't know? Well, Forex is a market where you basically pair commodities or currencies together. Okay. They also trade CFDs. You cannot trade that in the United States by law. Okay. But some of you do. For the time being, you're getting away with it because these companies are selling you these accounts, and these brokers, they're allowing you to get in on that broker. When you start making lots of money, like lots of money, I'm talking maybe right now, let's say you made an extra 100 grand on the year. You did really well as a new trader trading Forex or whatever. Okay, sure, that's fine for now. Maybe the IRS can look the other way. But what happens when you start making real fucking money? Do you think you're going to continue to get away with it? And now you just spent all of this time putting all this effort and energy into trading a vehicle you can't fucking trade legally. It's a problem, right? For anyone can see that. If you argue that point, you're ridiculous, right? You can't argue that. So that's kind of one thing. Forex still uses CFDs. So that's obviously a problem. But now I want to talk about a bigger scale. So maybe you don't live in the United States, so it's not applicable to you, right? This video might not matter to you. There's still a problem with trading currencies and commodities. So let's talk about pairing metals together. Let's say you're trading a product that pairs gold and silver or gold and copper together. Let's just say gold and copper. I have a question for you. Can you tell me what you fucking know about copper, about mining copper with a straight face? Can you tell me? You can. And what I'm trying to get at with this is there are so many variables when it comes to these commodities and metals. Good luck, guys. And you might be saying, well, I use technical analysis. And yes, technicals will work on any chart, but the problem where it comes to Forex, currencies, and metals, you would need to be so up to date and current with the geopolitical landscape across the planet. What the fuck do you know about a gold mine in Ghana? You don't. You don't know anything about it. There's a lot of information that a lot of people don't know about mining, and whether that material, let's say gold, is mined legally or not. So in Brazil, there are massive, actually Peru and Brazil, they have more illegal gold mines than they do legal gold mines. And there's by a large number. I don't have the number off the top of my head, but it's a huge differential there. Well, that gold still gets processed into the world, right? So that's a variable that is now hard to basically wrap your head around and calculate when you're trading. There's a reason why really good Forex traders, like legitimate, not the bullshit that you see on TikTok and social media, like legitimate Forex traders, where they're trading metals and currencies, there's a lot of manipulation tactics that go on. Take George Soros, for example. His huge win that he made in the currency markets, he manipulated those markets to his advantage. So unless you have some sort of, I don't know, in with governments, or you have the financial backing to overthrow governments or fuck with governments, good luck, guys. Like, there's so many variables when it comes to trading currencies and commodities. You need to be so up to date on all of these little regulations and numbers and fucking everything else. It's crazy. So now I'm going to propose a question for you all. given the little bit that I've given you, right, where there's issues here trading those other vehicles, why wouldn't you just trade stocks? We'll leave it at stocks first. Okay, I already know what you're going to say. You would love to trade stocks, but you can't because you can't afford to trade a $600 or $500 or even $300, $200 stock. You can't get enough shares. I get it. I understand that. Okay, so what if I could legitimately teach you a way how to trade regular stocks like SPY, Apple, AMD, Tesla, Amazon, all of these expensive stocks and ETFs, right? What if you could trade this legally with no problems, no bullshit, for a small amount of capital, like $2,500 starting, and you own that whole account, and nobody's taking a percentage of your profits? I'm certainly not fucking doing that. Well, there's a way. So the problem, as soon as I say the next word about what I trade, people freak out. They hear the word options and they think that it's so highly complicated and everything else. Well, listen, number one, I don't trade options like regular options. I don't even look at an options chart. You might be asking, well, I don't know anything about the Greeks, the theta, the delta. Well, I don't pay any attention to that either. I consider myself a stock trader. Okay, I trade stocks. I just execute via options. It's a way to leverage your money to work for you, where you can take fair size positions for a very small amount of capital. Would you not rather do that, where you could take advantage of real stocks like Apple and Tesla and AMD and Microsoft and all these, and have access not only to a small amount of capital, but a percentage-based penny stock like gain on the day? Because some of you say, well, it doesn't move enough for me, right? There's just not enough meat on the bone. Okay. Because you can't get the size that you need in Apple or Amazon or Tesla. And you're right. I get it. But in options, you do. So why wouldn't you trade that? If you watch this video and you're trading out of a funded account, still after watching this video and realizing what you're doing is actually illegal, and it's only a matter of time until, number one, they don't pay you out, or number two, you're going to get fucking shit from the IRS. Like, do you really want that headache? You're going to put in all of this time trying to master the currency markets, Forex markets, futures markets, and have to start from scratch. Why waste your time? Why not just cut that off now? Now, if you disagree with anything that I'm talking about in this video, go do your own research and see. There's nothing in this video that I say is wrong or not correct, period. It's all correct of what I'm saying. There's a reason why these TradeNet accounts, now some of you might not be around long enough to realize how big those were. It's the same thing that you're trading out of your account. It's the same company, it's just put under a different name. They're from Cyprus. What legal ramifications do you think you have, or protections, against some bullshit fraudulent company in fucking Cyprus, ran by one of the biggest scammers in the industry, guys? You don't. You have no legal recourse. It's gonna be a fucking problem. So take this how you want, man. But if you're thinking about trading futures because these funded accounts are enticing, man, oh man, bad idea. You're gonna get fucking hosed. You're gonna get fucked. And if you don't take this advice and you go against what I'm saying and you still continue to do that, I want you to remember this conversation. Okay, guys, I'm gonna wrap this one up. I think I got my point across, or at least I hope I did. Now, if you want more technical education, come check out the Whole Trick Trades YouTube. There is 1,000 videos based highly off of technicals and psychology for day traders, which is very different than the psychology that you guys are used to watching. In fact, I have a free webinar that is going to introduce a new method of trading psychology to you on October 1st at 7 p.m. coming up in a few weeks. Okay, guys, I hope you have a good one. I'm Pat Mitchell, signing off. See you next time. Adios.